Hey Boris, good morning, my friend. How you doing?
Good morning.
Ay. Okay.
Ai,
Uh,
ai, ai, Puerto
yeah,
Rico.
literally. Getting to the charts today, straight away I'm thinking, nothing is looking it looks better than yesterday for sure, but still not as clean as we know the charts can look. And straight away, it's just not giving a lot. But that's just my opinion. There are still opportunities out there, but. The conflict starts from the DXY. We'll talk about it. So the DXY, it's at the weekly 50 of May. I mean, you know it already. It's pretty much the same as yesterday. We're at that weekly 50 of May. So straight away, that's suggesting shorts coming out of the market. Of course, now as a result of that weekly 50 of May, we are seeing a bearish move on the DXY. However, the cross pairs, in my opinion, are longing out from the middle of nowhere. And today we can start to build that bias up to take longs, but then whether or not the longs make sense remains to be another question. So, of course, DXY here, I'll put it in so we can all understand what I'm talking about as well. There is a very large order block here on the weekly time frame. So, it does make sense why we would be looking to short the DXY. However, we will take a deeper look into that. So we do have, when we start to, let's get this the correct color, or else that will definitely annoy me. Weekly, and then let's put it on all intervals so we can really have a look. So that's the tremendously large weekly order block. So as always, we don't trade from weekly order blocks. So of course, we'd be under or looking for price to want to go a little bit deeper into that weekly order block. Then we start to refine that order block down. And in a moment, if I do current interval and above, that would make sense. Could. So on the daily, we can see just about within the day on within that weekly large order block, we've got that refined daily order block. Then we start refining that down. We're here on the 4 hour time frame. Plus, with the market gap in the market towards the upside, that's why my thought process yesterday was gauging more towards, let's see, a bit more of a continuation long on the DXY. That should then bring in some nice short scenarios on the cross bet. It wasn't to be because price isn't looking to fill this gap for whatever reason, and price is simply has only simply tapped that weekly order block, combined with the fact we've got that weekly 50 MA and we're already start to move to the downside. So we will use that in both scenarios on all the pairs that we're talking about to come up with a buy. So yesterday pretty much off the mark to in the wrong direction for myself as a result of well, I guess I didn't really update my bias, but more so I just had more of the technicals were suggesting that there could be room towards the upside. Nevertheless, could we have already rejected that weekly 50 MA for the week? Is there a possibility that we are not going to trade further into that weekly order block? That market gap remains there on the chart and we start moving toward the downside. Well, we can start to build the bias up now as a result of a bearish day yesterday. We at least have a 4 hour order block that we can say, okay, well, if price wants to pull back up to that 4 hour order block or any 15-minute order blocks in and around the area that has caused breaks of structure on the 15-minute, then perhaps we can look to trade short from those areas and then potentially look to take long positions on the cross pair. So that's the general bias at the moment. It's a bit of a fluid one, but yesterday it was a bit of a quiet day for me. It was only the potential of that sell stop that didn't trigger for me, unfortunately. Well, I should say fortunately, but again, I wouldn't have mind taking that loss. It would have been a half decent loss to take. Nevertheless, I was lucky that didn't trigger because it would have ended up in a stop loss. So we'll take a look to see what else is in the market today, but that's just the general consensus at the minute on the DXY. So if we go through, again, these are not color coordinated because I actually don't, well, I do have a favorite. The favorite is AU, but I actually can't long AU. So we'll come to that in a moment. But GCAD. So GCAD weekly time frame, it looks incredibly messy, but most importantly, if we just minimize that and have a look at the last weekly candle closure, it was bearish below the weekly 50 MA. No week, well, that bearish candle did indeed create a higher time frame weekly order block that again is quite big, so I'll leave it off the chart, but essentially it is around that weekly 50 MA. So price yesterday tapped in or pushed up into that weekly 50 MA, or was that, yeah, towards the end of New York yesterday, we tapped the weekly 50 MA. As well as the 4 hour 50 MA, and now we're finding that bearish pressure coming out of the market. So again, with that, I would be looking to short GCAD, but I would like GCAD to push slightly higher because if we look to the daily time frame, yes, there is a daily order block just here that price tapped, and then of course we had the rejection on Friday, and then yesterday we didn't fill or we didn't push higher up into that previous wick high on the daily time frame, and then here we are in the 4 hour. We're just refining this daily order block down, and price is a bit of a way away from it. And I've got it marked there around about 80 pips. And nevertheless, so we're seeing a turnaround now, which makes sense. Of course, look at the EMAs all stacked, pushing price down or rejecting price to the downside. But again, I don't really have any other reason to be shorting from this area aside from the fact that we have some, well, very powerful concepts in the EMAs, but I need to trade from order blocks. And ideally, I need to trade from higher time frame order blocks and refine those order blocks down. So I've got two options. Start looking at the 15-minute time frame and understanding if we can get some breaks of structure on the 15-minute time frame, potential snaps of Asia, retest the order blocks, and then look for short continuation based on the EMAs and based on the 15-minute time frame. Alternatively, wait for the better case scenario, which is right here up at the highs, which in all honesty, that's more than likely what I'm going to be waiting for because then we start to complicate trading a little bit. Because the question is that I ask myself, well, Charles, why do your higher time frame analysis if you're not really going to wait for it? It doesn't make sense, right? So the way that I can get into positions that doesn't take into consideration my higher time frame analysis is simply the Asia range trades. And if there are no Asia range trades, then I have to revert back to the higher time frame analysis and just sit on my hands and wait for price to get there or not to get there, or present me with something better on another day. So this is where I am at the moment. So that's the daily we've spoken about, rejecting the EMAs to the downside. Now the 4 hour, you can see exactly how we're just rejecting the EMAs, tap into that 4 hour order block. But again, it's not quite enough. If I had a 4 hour order block that was created, let's say, as a result of a bearish engulfing candle in the 4 hour time frame, then perhaps I could start building the bias up again, say from a new week. Because yes, I understand this is all previous price action, but that's how we trade, right? That's essentially well how I definitely trade. I wait for price to get to my areas, but I'd be willing to start the bias, let's say for a new week, but I don't have anything just yet. So at the moment, the best position for me to be looking to short GCAD, not just in line with the 4 hour, but certainly in line with the weekly and the daily time frame, it would make absolute sense just to wait for that alert to trigger just here as it starts to tap into this 4 hour order block that has definitely of late caused a nice break of structure. That's where I want to be selling from. There's really no other questions to ask about GCAT, in my opinion, unless, as I've said, we get a nice bearish engulfing candle now that allows me then to select a 4 hour order block. Let's just create a scenario like that. And then we can begin that process again slightly quicker. However, until then, let's say 2 hours and 20 minutes, I'm not really interested in doing that just now. So that's GCAD for me in terms of the short positions. Now, the long positions, let's have a look because yesterday, of course, we had that bullish pressure coming out of pretty much all pound pairs, and I think we had a bullish move on the EU in the end as well. So of course, it would make nice sense to try and ride the intraday perspective trend. But then here comes the other question. So do I just start selecting 15-minute order blocks here, there, and everywhere on the chart and open myself up to potential losses along the way down as I look for a long loss, look for a long loss, look for a long and lose again? And that's really my thought process at the moment. Why do that? If it's not really obvious in terms of an Asia range position, then I'm not inclined to do that. So the first thing I'm looking at in terms of an Asia range, well, has there been a break of structure towards the upside? Yes, there absolutely has been. But I can't determine what 15-minute order block gave me that break of structure. Perhaps this one here would be nice for price to come down and wait for. But then the question that I would ask myself was, well, when you're very unsure, is it even worth trading a position based on a 1 minute break of structure? In my opinion, it wouldn't be. So what I would be looking for, let's say if price came down here, I'd look to see if I can get a turnaround on the 15-minute time frame to support this order block first and foremost. Because yes, most order blocks in on the chart are going to give you a reaction of some sort. That's just what happens. And to get that proof, we can just look to the left. There was been an order block here that didn't really do anything. Price came in, and for sure we had a reaction. But why would we understand that this 15-minute order block would be the one to push price down? Even here, for example, 15-minute order, and what I mean is a reaction on the 15 or on the 1 minute time frame. That just suggests that, well, maybe I need to be a little bit more process focused when price gets to these order blocks that aren't supported by higher time frame analysis. And in terms of the Asia range position, isn't incredibly clear. Because here is also a nice 15-minute order block below Asia. Of course, price has pushed up from there, but it hasn't broken structure from there. Am I going to anticipate a potential reaction from there? Yes, but I wouldn't be inclined to take a position from there unless price actually comes in, breaks structure, and then comes back towards lower time frame break and then look for a position like that. So I don't know if you're in a position to unmute your mic, Boris. I don't know if you see that similarly or anything different, or perhaps there's something I may have missed, but at the moment, for me, GCAD, it's just highs and lows at the moment, and really the overwhelming bias for me would be a short position on GCAD or a long position, but it would just have to be from the lows from me. And like I've mentioned, in terms of creating a 4 hour order block down at these lows, I would have much preferred not to have had another 4 hour order block here. But as a result of this bullish, bullish engulfing candle, just about, it provided me with a 4 hour order block. So I've put it there in the chart. But then again, here is that 4 hour order block just here, refined on the chart on the 15-minute time frame. And then within that area, there's just not a lot going on. Let me just double check myself to see if there is a 15-minute order block. So the first thing I can say is, well, this is a clear area in the market, call it a session low for a moment. So through New York into Tokyo, into London, we failed to break below. So almost 3 sessions clearly of price not breaking those lows. So of course, that's a decent session low in the market. So I'll call it what it is for now. And then we can have a look to understand, is there any 15-minute order blocks in and around that area as well on that, excuse me, on the 15-minute time frame that I can look to manipulate if price comes back down. But as I look to these lows, there is nothing available just here. Let's move that slowly. Let's move that there. Nothing available just here. That's not available. And then as we start to locate the 15-minute order block, price is above the refined area anyway. So again, it's just one of those where I'm going to have to wait for price to come into the area, look for something to occur out of the area, and then hope that an order block is then created. With a session low, I've got the opportunity to be a little bit more aggressive, and perhaps I will, but it won't be immediately. I'd really, really want to see what price is going to do at that session low, because let's face it, by the time price gets down to here, price is going to be incredibly bearish. But that should give us range back up towards the upside. However, with that said, I would much prefer shorting down into that area opposed to longing into the EMAs that are in favor of short positions anyway. Certainly will give us a target, but the fact that we're already rejecting all of those 50 EMAs to me suggests that definitely shorts is going to be the way for me to go on GCAD. So I'll just have to wait and see, to be honest. But in the immediacy, really not seeing too much at all on GCAD. I'm just going to have some alerts on the chart, see what price does when it comes to areas that are pretty much in the middle of nowhere, and then I'll be fluid with that and see what happens. But until then, as you can see, highs, clear lows in the market. That's where, in an ideal scenario, I want to be trading from, unless it's an Asia range type of setup, which I don't think is incredibly clear at the moment either, particularly this area just here. So that's what I've got for GCAD. Still moving forward into the week, it could provide some decent setup, but until then, not too much at all. GJ. GJ, bit of a disappointing one, GJ. It wasn't as if we were waiting for GJ long since last week. And of course, price comes bang into the area and off it goes. But nevertheless, perhaps GJ shorts could be materializing. I like GJ shorts indeed. So higher time frame, weekly order block. Yes, it has been mitigated, but most importantly, price is failing to break above that area. Got some nice wick to the high. So if you look at my cursor across the chart, we're just above this 4 hour order block, to be quite honest. So let's have a look to see if price is going to come and retest those wicks. So nothing in a hurry. However, what I do, well, it's not that I like it or I dislike it. Yesterday's daily candle, tremendous pound strength, breaking above that daily 50 MA, breaking above the 4 hour 50 MA. So really the range is quite compromised in terms of the shorts from those highs, but nevertheless, there is range there to at least get to break even, in my opinion. So GJ shorts definitely on the table for me today. I should probably mark that with a bit of a green. If I zoom out, you can understand why the area makes sense. I mean, we're first and foremost, we're, in my opinion, still within that range. On the 4 hour, I think you can see it quite clearly. We had price breakout here on the daily time frame, but if you just look to the left, all we did was kind of fill the wick that was created anyway. And then on the 4 hour time frame, nothing really changed. So if I drag that 4 hour range across, you can see that the position that I'll be looking, excuse me, to take is just going to be a short from within a range. So first and foremost, you can look to already identify areas how that range is going to be manipulated. If I put that wick imbalance to those highs on the chart, and then we can see exactly where that's coming out within the range, it's above. So therefore, in my opinion, when price gets to that order block, nothing in a hurry. My expectation, to be honest, is this 15-minute order block is going to be smashed. And price is actually going to push slightly higher, potentially tap into that wick imbalance. And then I'll be looking at that stage. How is price acting on that current 4 hour time frame? I really do want to be trading out of that 4 hour order block that is currently there. So that's the order block that I need to be respected. I'm not really, well, I'm not going to be concerned about that 15-minute order block that's currently sat there, because what I'm going to need to wait for is a bearish engulfing candle on that 15-minute time frame that will actually give me a 15-minute order block, and therefore providing that we haven't then closed above the 4 hour time frame, excuse me, 4 hour order block on the 4 hour time frame, then I am still technically trading from a 4 hour order block, and also refined within that 4 hour order block is a brand new 15-minute order block that we have waited for based on that bearish engulfing candle. So potentially today, as Boris mentioned yesterday, I think he said GJ moved around 200 pips from London. Yeah, 200 from London to New York, 240 pips, which is crazy. And this is what really a pair that I want to get back trading. I haven't traded it for many, 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 many years. Replace it with EG, and it's literally quite the opposite to EG in all fairness. So yeah, I like the fact that GJ moves, but just need to be on the correct side of it, of course, to take full potential of those moves. So having that decent plan in place, I think having the understanding that wick imbalance is just above that 4 hour order block. If, for example, price does come into that 15-minute order block and then gives you a nice entry criteria by way of providing you with another bearish engulfing candle that then provides you with a 15-minute order block, then absolutely all systems go from that 15-minute order block. But that's exactly why there'll be no immediate positions coming from that order block, particularly once you've identified that you're simply trading within a range, and trading within a range, it is never that simple, in my opinion. You always need to sit on your hands just when you feel like you should be entering and price even starts to move in your direction. That's the perfect time where you need to sit on your hands. And more often than not, price will make that move short away from these highs. All the standard, not to talk badly about retail traders, we've all been there, but support and resistance, everyone knows how that works. The trade is entered, they're pushed into profit, they're stopped out, price then taps into an area where we can already foresee by way of wick imbalance or any other area, but most importantly, you then wait for that bearish engulfing candle that drives price further back down towards that range, whereby the breakout traders are also getting excited, trading the range to the highs, or trading the breakout of the range, hence why price starts to push beyond the range. And then, of course, the bearish engulfing candle will take them clean out again in terms of stop loss, creating that liquidity. And that's then what will drive price further down. So that's the setup, to be honest, on GJ. Not too much else is available to me. I did have a 4 hour order block in this area. And then I recognize, well, actually, Charles, if you're in a range for now, then you've got no business doing that at the moment, particularly because as soon as I place that on the chart, look at the range there. We're just trading short straight into a daily and a 4 hour 50 EMA that price is already closed above and potentially rejecting to the upside. You can see the hold up of 4 hour candles in and around that area. It's not by coincidence. There is always a reason why that is happening. So the indecision is potentially coming from the fact that, yes, of course, it is a 4 hour order block. We know price reacts from all order blocks, 1 minute, 5, through to the weekly and monthly order blocks. Price reacts from all of them. However, we're reacting in an element where the daily 50 MA is right there pushing price back up to the highs, 4 hour 50 MA pushing price back up to the highs. So that in itself is the reason for, in my opinion, the indecision. And let's say, for example, we do get a 4 hour bearish candle close below that 4 hour 50 MA, then it might be something to consider. However, the overwhelming thought process is the fact, well, actually, previous daily candle was closed bullish above that daily 50 MA. So I am expecting a rejection towards the upside from that daily 50 MA at some point today. So whether or not it makes sense to actually short from there, I don't believe so, because we are right on that daily 50 MA. So that's GJ to the highs, in my opinion. Take a decent look at that later when the alert sounds. And you can see I've got an alert here just in case price does break down. And I could be wrong, right? The price may not be respecting the range as a result of yesterday's candle, or even we can say Friday's candle actually closed. That was the first candle that closed in an area on the daily time frame where price had been previously failing to break. So I understand that my thought process could be wrong, and actually the range as a result of Friday has now ended, and this is now creating a new trend to the downside. So I understand where I could be potentially wrong, but the way that I will safeguard against myself is by saying, well, actually, it would make a lot better sense then for you to trade alongside the daily 50 EMA. So potentially today is not the day for you to be finding out whether your analysis is right or wrong. However, tomorrow morning, let's say similar time, we get a bearish candle closure below that daily 50 MA. We're already now trending below on the 4 hour time frame, below the 4 hour 50 MA. At that point, I'll accept happily that I am wrong, and then wait for price to pull back up into an area of interest and look to ride price down alongside all EMAs. So that makes, in my opinion, excuse me, a lot better sense. So today's not the day to find out if I am wrong. I will just wait for price highs and lows. Tomorrow, I hope for a bearish candle out of that area if today's analysis is incorrect. So that's GJ. Don't mind GJ at all. I can definitely see longer term how a short position can play out, and I can see the shorts from the highs as well. So I don't mind GJ at all. I'll give it a nice green at the moment. So that's GJ. AU. Bit of a shame, AU. As you can see, it looks like this looks like the posted on TradingView. This looks like the best, but I cannot take a long into the weekly order block. It's a strategy fundamental. I'll lose everything if I start doing things like that. So weekly time frame, weekly order block, looking to take shorts out of that higher time frame, weekly order block. Nevertheless, I can still identify. I'm very open-minded as a trader, where I recognize that my strategy isn't, well, it's certainly helping me because it's stopping me from taking positions. But I also understand that AU is probably one of the best looking setups intraday wise. That I have seen this morning. So even forgetting about the day, excuse me, the weekly order block, most recent price action is, in my opinion, specifically on the daily time frame. We've made a high from here. So of course, like I've mentioned yesterday, we've got this bullish structure on the daily time frame. So of course, when you can understand where bullish structure is on a higher time frame, you do really want to look to refine those areas down and take positions from them. However, I can't, but I'll still look to discuss the longs if you guys are looking to take the long scenario. And the reason why the longs actually make sense is because the setup is pretty much confirmed. Yesterday, we were hoping, or I at least was hoping, that I'd get to the charts today and I would see a bearish candle closure below that daily 50 MA and also below this bullish structure, meaning that any time price now reacts from this area, for me would then be a pullback to take continued short positions. That's what I want to do. However, price isn't allowing that. So for me personally, I've got to wait and do pretty much nothing and understand that if price does go to my better area to short from within that weekly order block, the longs isn't something that I've been a part of. It's just part of my strategy, to be honest. So, nevertheless, what I mentioned is the setup itself has been confirmed because yesterday, of course, we got to the market and price was printing those or previous price action lower low, lower high, lower low, etc. If I move that slightly higher. So of course, bearish coming out of last week, then into London, straight away we had this bullish move breaking all previous structure, pretty much telling us that the DXY is weak, and everything else is looking to trade long against it. And perfectly, we've broken structure, come back down into what I would see or would be ordinarily seeking a point of interest at this stage to look for continued long. However, what we have is a bit of conflict. Again, I'm open-minded enough to check myself. So if this isn't a break of structure on the 15-minute time frame, what this also could have been is if we have this order block like so on the 15, and that was structure point in terms of, or that was a structure point in terms of from this area, depending on how you view it, the low could have come from here. So we haven't actually potentially depend in terms of order block selection, we haven't broken this order block. So therefore, technically, you could argue that we are still bearish intraday. So it looks okay in my opinion. We haven't for the shorts, what I mean now. So we haven't broken lows. So of course that's the only caveat to that. We haven't broken lows in order for me to say, okay, when price comes back up to here, then I'll look for a short. I can't do that. I need some lows to be broken. And ideally, I want this 4 hour order block to be broken to the downside, of course. And again, I'd love to see a daily candle closure below that daily 50 MA. And then I'd really be trading alongside higher time frame. And then at that point, what we could then guarantee is, well, nice. This was a low. Here was a lower high, followed by a lower low. We'll wait for the pullback into a lower high area for that low low continuation. So it's all forecasting at the moment. Nothing is crystal clear. But if you were to take that order block off the chart and understand that potentially you have some aggressive breaks of structure on the 15-minute time frame, I could quite understand why you would be looking for a potential long from these areas using the daily 50 MA supporting your position long. Of course, you've got price coming out on the 4 hour, giving you the 4 hour order block to look for the long position out of there. It makes sense. It's nothing that I can take, however, but if you guys were looking at AU longs at the moment, because I don't see any 15-minute order block where I didn't see one this morning when I was charting, what I would be waiting for is price to show me something else this morning. So first and foremost, some structure points. So that's definitely an aggressive structure point. And of course, here, in my opinion, would be the best structure, the best structure point to be waiting for price to break. So of course, price then comes in. Worst case scenario, what do you do when price is already in your area and hasn't broken any structure points? Well, of course, the most aggressive way you'd be looking for that 1 minute break of structure, but more so, my recommendation is always to wait for that bullish 15-minute engulfing candle because that will give you with a brand new 15-minute order block to trade from. And then when price gets back, you would have already have broken 1 minute structure points as a result of that bullish engulfing candle. And then when price gets back to your 15-minute order block, then you're more than welcome to take that however you want. If you want to take that as a limit order or wait for the cherry on top of the cake, that more often than not can save you from a potential loss. And then if it develops, then it's simply that, well, actually, I'm just waiting for the full degree of entry criteria to prevent it to present itself anyway. So what I mean by that is, of course, once you've got that, let me draw it so you guys understand. Once you've got that bullish engulfing candle like so, of course, that will break the fact that it's engulfing. That will break 1 minute structure points that were printing down on the way down anyway, like this. And then as a result of having the engulfing, you'll have a brand new order block to trade from once price gets back in. Of course, you can look to take that as a limit, or what you can do is wait for another 1 minute break of structure, which will turn this downward leg back bullish. So therefore, you'll be trading alongside your initial break here, and then you'll have your change of character, as they would like to call it, then trading back to the upside. And the reason why that makes good sense is because you'll see imbalances in the opposite direction that you can look to target quite aggressively. So it makes sense either way. However you'd like to take that, it would make sense to take it. But for me personally, I'm not going to take a long into that higher time frame weekly order block. So the best case scenario for me, I need to see a snap on the 15-minute time frame. What I mean by a snap is a solid break of this structure, break of Asia at least, come back into these highs. Then I'll look for a short position down based on the 15-minute only. But with that said, we do have quite a large 4 hour order block just here anyway, but it's pretty irrelevant at the moment until we do something from that order block, I must say, because we've got order blocks in both directions. So what that's telling me is if I do get a snap or a break of structure on the 15-minute time frame, I'll look to target some of these highs where price could be looking to come back to. And the first thing I'm seeing is this 15-minute order block just here. So I would look to utilize that when price gets back up to those areas. But until there's a break of structure to the low, it's irrelevant, I must admit, because I won't be taking a short position from there without this doing anything. It doesn't need to do anything from that area. As I said, if price just breaks and then comes back, then I would have questions to answer by the time price gets back up there. So I could look to take that as a 1 minute break of structure aggressively, or I could look for a bearish engulfing candle, just a bearish candle, 15-minute bearish candle, which would then give me a 1 minute or a 5 minute order block to look to trade from short. So I've got a multitude of options to take. However, I need to see a break of structure first and foremost. And better still, just to finish on that, it would be best if this was tomorrow and there was a bearish candle closure below that 50 EMA, because what could happen, and this would be the last illustration on AU, I promise, what could clearly happen is price could dip below that, and then we'd be looking to take price as it comes back up, and then price simply just closes there and leaves us with a beautiful wick to the downside, because let's face it, that's what we expect the EMA to do. So I'm waiting for my own strategy to not play out in order for me to look for a short position in the immediacy. Alternatively, what I have up at these highs is the best short scenario from the daily refine 4 and 15. But I really hope that price doesn't get all the way up there, because then, well, I don't really mind. I can't take a position anyway, but that's 130 pips that price is away from at the moment. So we'll have a look. But again, AU, it's not bad. I can understand when I can look to take a position. I can understand the positions that will look good. So we'll have a look to see if we get the break, pull back on the 15, and go from there. So that was AU. EU, a bit cleaner in my opinion, a little bit. But again, the downside or to the disappointment of many, I really don't see the longs. I really, really don't. And to be honest, I'm only seeing shorts. And I've double checked myself many, many times. It's not because I prefer shorts. It's just if I look to the left here on the 4 hour, first and foremost, there is just no real reason why we should be looking for a long right now, a long reversal. And I believe what's happened in the market is simply as a result of this leg down, creating that lower low, first and foremost, breaking structure finally. What this is, in my opinion, is just a pullback. It's just a lower high, in my opinion, for a lower low. Notice how I've not extended this order block. I respect the fact that there is an order block there, but for me, it doesn't mean, Charles, start looking for longs. Of course, then, if you start to understand, well, if the DXY is bearish, then of course it does make sense to look for longs. But for me personally, I can't just use the DXY and then place my bias on a pair. It should be what's the pair doing first and foremost to trade it, what's the setup look like, what's the time frames looking like, and then I revert to the DXY for the confluence. I can't say, well, DXY looks bearish, so I must look for long positions because I can't see the longs. Not that I can't see them. I don't think the longs are worth the risk. And I don't mind taking risk in trading. I don't mind taking losses, but I like to take good losses, and to take a long position at the moment on EU for me would just seem a little bit impatient, because you can see where the positions are going to arise from. You just need to ensure, guys, that you've got the money to play with by the time you're correct or your analysis actually reaches your levels, because you can take all these reversal trades here, there, and everywhere on the chart that aren't particularly the best type of setup. And then when price gets to your better areas for the setup, then you've risked all your money and there's nothing left to trade. So weekly time frame, weekly order block looking to come out short. So that's the initial bias. And when you start to refine those areas down, of course, you can see top of that area, that higher time frame, daily order block right up at the highs. But I'm not going to get too focused on that because that's a really long distance away for me to say, well, I'm not going to take any participation in EU until price comes up there. I will act slightly more dynamic with the price, but I need it to show me something first and foremost. So again, looking for a short position, it's not even that the fact that I can't take a long, I'm only going to take shorts. It's the fact that shorts really have to present themselves to me as well. Again, looking for the shorts, we've broken structure on the 4 hour time frame, made the low. This could be a lower high, but it hasn't been confirmed just yet as a result of not breaking the most recent low. Let's say we break the low, then pull back into an area, then absolutely shorts are confirmed, again, in my opinion. However, what I've done on the 15-minute time frame, because I recognize, well, you could be just acting a little bit too conservative on all of these pairs at the moment. What I've done is try to understand, well, okay, if I'm wrong, which I don't mind being wrong, just as long as it doesn't cost me any money, first and foremost, being wrong, how could I look to take, let's say, a long position? Firstly, so what I'm going to need to understand is, well, what's going on? So of course, yesterday, the longs, now we get to the chart, longs would have made sense, but it wasn't for us to know that based on what we saw on the DXY. So for me to take a long today, first and foremost, it's nothing, it won't be immediately from here. I'm going to need to see 50-minute price action break towards the upside, then come back down to a valid point of interest. Then I'll be waiting for a 15-minute bullish candle for me to use a 5-minute order block, and then even potentially wait for a 1 minute break of structure from there before taking that long position up because I'm really, really don't like the longs. However, I'm a trader. It's not for me to get attached to what I like and what I don't like. I just need to make money. It's as simple as that. So I will take a long if this entry criteria presents itself. And then in terms of the short, so we've got a bit of difficulty now because there isn't really, well, there are so many areas where we could look to be shorting from that it then becomes a little bit not confusing, but when you're like we discovered on the previous pair, when you can just put order blocks in the market everywhere, what one do you use? Particularly when you're not using higher time frame analysis to start guiding your bias. As you can see, in a couple of seconds, we've just put 3 order blocks on the chart where we could be looking for short positions from. Fair to say. However, it doesn't make sense. So what I need to do is find exactly the same in the inverse. So what I have now is a clear low in the market just here. That's easy enough to say. If I then also get a snap of Asia and price comes up to these highs, then again, I'll wait for exactly the same in terms of 15-minute bearish candle closure, one or a 5-minute order block for a 1 minute break of structure, and then I'll take the position short like that. So that would be me. I'd be quite comfortable to take a short position um, based on that break of structure. That's simply based on the higher time frame, in my opinion, looking more short than it is looking long. So I wouldn't necessarily need to see the most recent low broken because, in my opinion, I'll be trading back down towards that low based on the fact that my belief currently is that we've just created after a low. This is going to be a lower high to be creating a lower low continuation. So if I'm to make an equal low in the market from up at these highs, then I'm happy to see that. If even we break that low, then even better for price to come back up and look for the short from those highs. But again, at the moment, just nothing for me to trade, unfortunately. So when there's nothing or when price hasn't developed the way I need it to develop, I just refer to highs and lows. Asia range criteria. Um, I'd be looking at an Asia range from this area here because what we can quite clearly see and say is that price was printing those lower lows and lower highs, blah, blah, blah. all the way into this area. Then we've had this tremendously bullish move that has broken structure points to the left, very clear to see and say. And then what we need to identify is, well, has that break of structure? Can we accredit that to a particular 15-minute order block down at the lows? And here's where it all ends. I can't. There is no 15-minute order block down at the lows that I can look to take that position from. So no Asia range for me. And in the inverse operation, again, no Asia range there either, from those highs, of course. So EU, not a lot at the moment. And you can see based on my alerts, I am going to be reactive with that, but reactive to a plan that I've already created, right? So we've got alerts above the area, alerts slightly lower now since that's already triggered. And yeah, I'll just wait to see, do we have a break of structure highs, break of structure lows, pullback imbalance, break of structure short, or break of structure long. So that's what I've got for EU. Again, it's not the end of the world. It's just having a good, solid plan that you can quite clearly rest your trading head on and say, well, when this happens, I'll do this. When that happens, I'll wait for that. And then if I get the two combined, then I take a trade. Simple. GU. Did I like GU? I liked at least one pair today. Nevertheless, GU. Weekly order block looking to come out short. Beautiful candle last week, bearish engulfing, took out about a month's worth of price action and beautifully closed below the weekly 50 MA. Pretty much where you want to be, to be honest. Looking for shorts, then back down into that weekly 50 MA and understanding that price is more likely going to close below it. So that's all great news. Yeah, was a bit of a favorite. I like the fact now that, of course, as a result of last week's close, we're going to have to move a tremendous amount to then move above the daily and the 4 hour 50 EMA, which is great because beyond that, we have a daily order block and refine that daily order block down. We have that 4 hour order block. So, looking for the best position to take that short from, of course, in my opinion, it's going to be from this area. Are we close to that now? Let me have a quick measure. Unfortunately not. 112 pips away. So again, well, I mean, it doesn't look as bad on the 15, but yeah, the pips speak more volume. So 100 pips. So nevertheless, that would be the best position to take that short from. I can't say that enough. That in itself just aligns beautifully. The weekly be looking to reject that for the week. Daily and 4 hour 50 may looking to reject that on their respective time frames. Refined above those areas because of course we know more than likely EMAs are going to be attacked with a wick. That wick would definitely be created on the weekly time frame by price trending back beyond that as yeah, by price trending beyond that area, then price pulls into the excuse me, pulls into the area, and then we'd be looking for the rejection of 4 hour rejection on the daily, and then of course that would then also correspond with giving us a rejection on the weekly time frame. So I'll be sticking with that for the best position coming out of GU this week. And I like the fact that the longer we stretch towards the end of the week, I understand it's only Tuesday, but the longer price stays away from that area, the better. Because let's say on Friday, not only do we have only 24 hours or 12 trading hours that we're awake to reject the weekly, same on the daily, and then the 4 hour very quick dynamic EMA that we only have the 4 hours to reject that. So that's the best scenario. Now, here and now, that's what we're all here for. What do we have? So yesterday, again, bullish pound creating annoyingly a daily order block that we again, it's kind of in the middle of nowhere. That's why I'm just really reluctant to look at it because even the turnaround you see here, did that fill an imbalance? It didn't even fill that imbalance. So, for example, what I always do often is I say, well, am I incorrect with my order block selection? And when I am, that's when I will look to take a position based on a new order block. However, that wasn't even touched either. So it really is one of those where it's kind of like, well, if we haven't tapped into an order block and we're creating reaction from it, then does that necessarily mean that we're bullish? In my opinion, no. Just like EU, it's suggesting to me as a result of these structure points that have now been broken, lower low, of course, price pulls back up into a lower high. I'm expecting a lower low continuation. But again, that would suggest DXY strength, which we're just not getting at the moment to push the pound down. So very conflicting day, a conflicting week, I must admit, but it's a good one to test yourself every now and again because not all the time we're going to get to the charts and it's just going to look like a crystal ball and we shake it and we find out what's going to happen this week compared to last week. It's quite testing, but it's also quite easy because you understand exactly. You either sit out and wait or you risk money in the middle of nowhere. It's each to their own, right? So, where am I? What can I look to do? As I've mentioned, if I'm wrong, I'll put in this 4 hour order block now and understand that, okay, Charles, you can be wrong. The market can do what it's like, what it likes. If the market wants to be bullish for the week and the DXY wants to be bearish for an entire week, then you need to start adapting, i.e., start building your bias up fresh. So I already know as a result of yesterday, we now have a bullish daily order block. So therefore, anything that I chart on the 4 hour, I know I'm going to be within that daily order block. So of course, this 4 hour order block is at the absolute lows of the dailies. That's a good start if I'm looking to take a long position. With that said, straight away, I recognize that all EMAs, particularly the weekly, is definitely against me. So, of course, if I'm looking to take a long position, I really want to be doing that as soon as possible because as we start getting towards the end of the week, I am expecting this current weekly candle to want to start pushing bearish and closing below it. So, if I need to come up with this thought process and put it into action, it needs to be sooner rather than later. So there's that 4 hour order block. Now, if I place that on all time frames, put it on the 15, just like on EU and AU, where are we? Here again, is there any 15-minute order block available for me to play with that isn't actually that is rather refined within that 4 hour order block? Because as we said, we're not just going to be putting 15-minute order blocks in the middle of nowhere. So first and foremost, if I'm going to go through the effort of putting on a 4 hour, I need to have a 15 refined within that area. It only makes sense. And I've got one there. So I'll look to use that if price comes back down. But what I won't be doing is putting it all the way across because I have to admit I don't trust it a whole lot. But again, as I've mentioned, I'm not here to judge the price action. I just have to work with it. So what we can say now on the 15-minute time frame is that price action, of course, looks nice and bullish. We were printing lower lows, blah, 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 lower highs, lower lows, etc. Good old bullish move, breaking structure to the low. So of course, basics come back to the area, take the long position. So I will be interested in doing that. I must admit, it looks nice. And as I said, if we have to wait 112 odd pips for price to get to our most desired, in fact, 181 pips for price to get back to the desired short area, then perhaps if a good opportunity presents itself for me to take a long, then I will. So first and foremost, structure on the 15, very much so broken. If I get over the fact that this isn't just a low, lower high for a lower low, then great. But if the lower low doesn't create itself and actually we just come back, and in fact, what's happening for the week is in fact the opposite, higher high, higher low, higher high continuation, then it's just a good risk and roll of the dice. And I'll take that risk on board. So let's see if price comes back down to the area today. And when it does, I'll act accordingly. I'll be waiting for at least a 15-minute bear, not definitely not bearish, 15-minute bullish candle. That will allow me to then go with a 5 or a 1 minute order block. And then from, well, I've not seen that one in a while. 5 or a 1 minute order block. And then when price comes back down, I'll have a look to understand whether or not I need to wait for a 1 minute break of structure coming out of that area again, or take it as soon as price gets back into the area. We'll have to see how price start or how price approaches the area. If price approaches it with a lot of velocity, then of course I'm not going to be taking that position immediately at all. And of course, it would be this type of scenario. But if price starts to trickle its way down nicely, 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 and I can see that there are clear lower lows and lower highs in the market, and one candle will break structure, i.e., break the most recent lower high, pull back into a lower low, then perhaps I won't wait for a further 1 minute break of structure. I'll just see my bullish engulfing candle order block behind and I'll take the long position back up and ensure that I'm able to get break even by the imbalance in the opposite direction because of course we would be bearish on the way down. So yeah, I don't mind GU longs. Whether or not it's the best type of trade, I don't believe it is, but it is the best opportunity that I've got at the moment. Now, of course, if that 4 hour order block is completely incorrect, then you can absolutely understand the better order blocks that are on the chart. So the thought process then being, well, if that is the lower low on the 4 hour time frame, lower high, lower low can be driven definitely into this area. I can definitely see the reason for price wanting to come into these areas or even this area here. So again, risky long position. Is it worth it? I'd say so, so long as you can wait for your entry criteria. Is an instant position worth it or a limit long now? I don't believe so. So just wait, see how price approaches. If it gives you the entry criteria, then the onus is on you. But I will probably be looking to take that long just in case I'm incorrect and price is going to start reacting from most recent price action. So that's GU. US dollar CAD. That's unchanged, to be honest, team. Look, yesterday we saw on the 4 hour time frame range, and look what's happened. We've done nothing. All I've done this morning is drag that across, rearrange my EMAs, and double check that I'm still looking at it correctly. So weekly order block up at the highs, weekly 50 May, refining that area down right up at the highs is where I want to take the best type of short position down. Price is, of course, trending above daily and 4 hour 50 MA. So if you look to the daily time frame, I'm expecting this to push back in or push back higher. And then, of course, now we're getting a range based on the fact that, well, first and foremost, DXY doesn't know whether it's coming or going at the moment. We're approaching a 4 hour order block that does make sense based on, if we say, but basic price action. We made a low from here. Price came in, made a sorry, lower high. Price came in, made a lower low. So of course, when price comes back up, we want to see a reaction from that. But where's the reaction into? Straight into the daily and the 4 hour 50 MA. That of course wants to take price back up to the highs, which then is going to be looking to reject the weekly 50 MA and weekly order block. So here I am on the 15-minute time frame. Structure point identified, alert below that structure point, and just like on the other pairs, to be honest. So if we're looking at potential EU reversal longs, GU reversal longs, then let's say perhaps then if the DXY is indeed weak, then US dollar CAD should do something along those lines. Push down for the retest for a short position. So at the moment, just going to wait to see if that structure point is even correct. I'd say it needs to be a little bit lower because on the 15-minute time frame, we've had a high from here into a higher low, failed to make a higher high, done nothing since, and we're just kind of in this area at the moment. So yeah, the alert I'll keep where it is, but I know that technically here's a structure point. And again, I believe that tomorrow could be the better day, better trading day. Because let's say, yes, let's play the scenario that the DXY is indeed weak. Then what we'd love to see on US dollar CAD is a bearish daily candle closure below the daily, below the 4 hour 50 MA, and then we'll get this nice scenario where we get the pull, well, we'd have the push out, pull back into the high before continuation short. That would be what we want to see based on the fact that we're actually trading out of a 4 hour order block as well. So we'll just have to play that one by ear. At the moment, not too much on US dollar CAD for me. Up at the highs. Missed something actually. So refine within that 4 hour order block. Here's a good scenario. So that 4 hour order block's been mitigated. Yes, it has, but right up at the highs, if I zoom all the way across, 15-minute order block, still very much so available. So let's paint the worst case scenario, and you guys know what that is. When price comes into a refined area without breaking structure beforehand, you then start tripping up and asking yourself questions like, what do I do now? Price is in my area and I haven't broken structure. Well, first and foremost, you can absolutely wait for price to break structure. So if price is pushing up like so, that price then comes into your area, you can wait for structure to be broken first and foremost. And that would be my highest degree of recommendation in terms of you gaining steps towards executing consistently. If you say, nope, I'm going to wait every single time price comes into my area, if it hasn't broken structure beforehand, price needs to come in, then break structure, give me another 15-minute order block, and then I'll take it from then. You can absolutely do that. So that's one scenario. Second scenario, of course, you could look to take that aggressively. What that means is, of course, when price gets into the area, then of course you'd be waiting for a nice intricate 1 minute break of structure. Look for the break, lower time frame, order block, take the short back down to the opposite imbalance that of course caused the push up into the area anyway. And then better still, of course, roll the 15-minute bearish engulfing candle. That will safeguard all to the left. That will break 1 minute structure points if it's engulfing. If it's not engulfing, it won't. If it's not engulfing, what you'll probably see, just a bearish candle, is a wick that would ask you some questions. And let me draw that so you guys know what I mean. So if we're trending up on the 1 minute time frame into your area, you then get a bearish 15-minute candle. What that could well be then is, if this is your structure point on the 1 minute time frame, what that will then allow you to, what you will probably see rather, is a wick on the 1 minute that has broken that. And that's if it's just bearish. If it's engulfing, you'll get the full candle break. If it's just a 15, you'll probably get a wick, which will still offer you some questions when you get to the high, whether or not you want to take the short down. Hence why I always say engulfing is a lot better. Um, so that's an opportunity as well. But what I would be looking to do before taking a short from that area, you can see I've got two alerts up there just so I don't miss it, is I will be looking at the DXY at that stage to understand whether there's a DXY in a position to look to go short. And what that could potentially look like is a DXY, let's say, back up to that weekly 50 MA um, before looking to go short on US dollar CAD. So alerts here, there, and everywhere. So that's all I have for US dollar CAD team. Um, yeah, I think that's not bad actually. US dollar CAD looking for the short there, lining that up nice with the DXY. If the DXY is truly going to push back up to go short again based on the structure, it makes good sense. We've had that low created in the market, break it structure to the left, pull back up into a 15-minute order block to take price further down for that lower low continuation. And then US dollar CAD, pretty much identical. We've had price come up, haven't quite broken structure points, but that's what we've spoken about becoming the worst case scenario where price comes into your area without breaking structure. That's where you then refer to the DXY to say, well, does it make sense for price to look to turn around from this area anyway? So that's US dollar CAD. I'm going to give that a green to be fair, because it's not bad. But again, it is DXY weakness, so we have to play it by that. And then UJ, finally UJ. Boris, your patience is immaculate. Sticking around for this amount of time.
Yeah, no problem.
I hope you're getting something from it because
Yeah, I am sure.
I'd hate to waste your time, but it's
No.
this is just what I'm doing, right? I don't attack the markets without thinking about all of these different variables. Worst case scenario, what if I'm wrong? What if I'm completely wrong? Do I have enough time to even amend my bias? Like, yes, I just thought, you know what, forget about it. It's the ship has sailed. Um, but,
Um,
but I'm glad you're here, Boris. Anyway,
yeah,
uh,
sure.
so UJ, I like you. Okay, I don't mind UJ. We'll talk about it. So weekly order block looking to go short out of that weekly. A higher time frame order block. Fair to say. Refine that order block down, refined within is the daily order block. So we're getting smaller, then we start refining that area down. Boom, 4 hour order block right up at the highs. That's really, really, really well on a short front. In the immediacy, looking to short from that. I don't know by the time the DXY pulls up to those highs, i.e., weekly order block. I just feel that by the time UJ gets up here, I mean the DXY, I have no idea where that's going to be. It's probably going to be in space somewhere. I don't know, potentially even fill the gap. But the DXY is going to have to move, in my opinion, a tremendous amount before I can look to take a short on UJ. So now the biggest question is, well, Charles, if it's going to take you ages to look for a short, what about trying to take it long? I'm definitely in favor of doing it, and I think that potentially, as a result of the break above now, it potentially may be worth a risk. And really, I'll be honest, it's only on the 15-minute time frame. There's nothing on the daily that's going to help me with taking a long position now. We've got previous daily lows, for example, around there, but it's just not enough. It's not doing anything. So I'm not even going to take it into consideration. 4 hour time frame to help me support me with a long position. Again, it's just nothing. All we're doing on UJ, we're just kind of trickling towards the upside. But with that said, on the higher time frames, right, when you're getting that trickle towards the upside, more often than not, it's just trending quite okay on the lower time frame. So that's why I want to try and figure out whether we can do 15-minute only on UJ to kind of just grab the trend pretty much. And when I'm looking at that, you guys know, so I've got the Asia range to look to play with first and foremost. And then secondly, I can say, well, have we got a snap and a retest based on breaking Asia, breaking structure highs as well, basic structure? We've got that now. So I'm happy to see that. So it does look good. And I had this order block on here to say, well, I would only take this order block into contention if it caused me a break of structure, and it actually has. So now I'm kind of forced well, I'm not forced, but whether or not I want to stick by my thought process or not. So the first thing I'm going to need to ask myself is, well, stop loss placement. Where do I want to place my stop loss? Is it possible to place my stop loss there? So I already know this is going to be a very risky type of position, but based on structure, is it going to be worth it? So we are simply making higher high, higher low, failed to make a higher high, higher low in that case, higher high, looking for that higher high continuation. So UJ, knowing that my targets are astronomical, up to these, oh, wrong one, up to these highs, I have the opportunity to kind of play around with the stop loss a little bit, but I don't want to take the mick about it because then it just becomes no point. I want the risk to be overwhelmingly in favor to say it was worth taking. So on UJ, if I was to give myself, let's say, 25 pips, just on the outset to say, well, I won't close it out until we get right up to these highs. Just want to check the EMAs. Yeah, so EMAs, they're not even really helping the situation on that particular position either. Nevertheless, when price comes back, I need it to show me something. I'm not going to be taking that immediately. Just double checking. That is an Asia range. But when did we break structure? Yeah, that is an Asia range. Okay, cool. So a double whammy with confluence then to take that position because technically, so the Asia range, how can I identify a break of structure on a 15-minute time frame? Tick. Yes, I can. Can I credit that break of structure to a 15-minute order block? Yes, I can. Now, the only thing for me to then understand is Asia even available, which I don't think it is, unfortunately. I think that Asia's already been filled, literally on London Open. Yeah, so that's a pain in the ass. But I guess that's what's provided us with the break of structure. So straight away, in that case, I'll revert to my highest degree of entry. 15-minute bullish engulfing candle. Allow me the opportunity to really trust this order block because actually, I would much prefer to take more of an aggressive position from this order block. And the only, I mean, don't ask me why. I mean, we've got support by the 4-hour 50 EMA. That's pretty much it. But again, these are none of these are immediate positions. So here I'm going to need to see a bullish engulfing candle, absolutely engulfing. I'm not desperate to get in a UJ long. Engulfing, start the process all over again. Same protocol here, engulfing coming out, same protocol. And then other than that, there's just it's just really difficult, UJ, to come up with any valid points of interest from these nearly areas. So I placed this, where's that coming out? Right there at the lows. So UJ, it's just unfortunate. I really wanted to get something out of UJ as a result of not taking anything from the short. And then it's just not providing anything in terms of pullbacks for me at all. So I'll have a look how price reacts to these 15-minute order blocks. If I get the entry criteria, I think the risk, or rather the reward, outweighs the risk if price is just going to continue trickling up. Because the worst thing I'd want to see is price just trickle all the way back up to that area and think, geez, not a single position. Which it happens, right? So that's trading. But that's all I've got, team. The only thing I've got today, my missus has a golf lesson. I'm gonna put the pressure on her and watch her. But other than that, I'm on the charts, guys. So as and when I see something, I'll keep you guys updated. But as I've mentioned, not too much. Tomorrow, I think, could be a much better day. However, we're traders, we work with what we've got. So Boris, a special thanks to you as always.
Thank you.
Maybe at one point in the future, I'll fly to you and we'll trade in person. And so you don't have to join the live. I'll take you out for dinner or something, and we'll just bring the laptops out
Thank
and we'll have a
you.
good time. Um, that'll be my promise to you at some point in the near future. But
Sure.
till then, my friend, keep doing what you're doing, stay consistent, and like you did yesterday, if there's nothing showing up for you, just shut the laptop.
Yeah, I mean, I should have tried something, but
Nah,
when
I
it's
mean
not
that
provided,
that's
it's
the
not
thing.
provided. I mean,
That's
well,
it. When we're very, very good at technical analysis, that's what I say to my wife as well. It's
mhm.
kind of like sometimes you're too good because you can always find a position. But when you're too good and you can always find a position, you kind of have to think, well, actually, is the position that I'm finding even worth trading? Because I know all the pairs today that I pretty much said no about. I can find a position easily and take that move to break even and just see what happens. But that's a lot of effort. And when it's not from your higher time frame points of interest, then it just kind of asks the question, so why do I bother doing it if I'm not going to be trading from it anyway, you know? So that's my theory today. But let's see. There's a couple of nice points of interest, but I want to see what Price is going to do because tomorrow is going to be a new day. Price may look even better tomorrow, and then we'll be wishing that I'll be wishing I didn't take a loss, and then
Yeah, sure.
I'll have extra bullets for tomorrow. But I'll keep you posted on that. Have a nice day, Boris. You take care, mate.
Yeah, you too. You too.
Thank you, buddy. All the best.